Learn the art of investing on Moneywise.
Bringing you another episode of the Moneywise Podcast series. Hello, everyone. Ahalya here, keeping you company on today's conversation, which is going to be a very interesting one because we're actually taking a page from one of our favorite tales. I'm going to tell you more about that tale in just a bit because we can actually find out a lot about the areas of financial wisdom from, the tales that our grandparents used to tell us. But to help us slice and splice that wisdom is Kanika Kapur, our guest for today's episode, the founder of Spin Wealth, who has worked in the investment industry for over a decade. She was even recognized with the prestigious Fox Story India's 50 Inspiring Women recognition for her role as a wealth coach and as a catalyst in wealth creation. But this is the best part. She's committed to empowering women to take control of their finances, facilitating their journey towards financial freedom, which is, what makes her the perfect person to be talking to today. Welcome to Moneywise, Kanika. Thank you so much for being here.
Hello, Ahalya, and hello and welcome to all you fantastic listeners of this Moneywise podcast. I'm thrilled to be here today.
I think let me start by telling everyone that story, Kanika. What do you say?
I agree with you, Ahalya.
Okay. So I think we've all heard of, many moral-based fables, right? That was how we were taught good from bad, right from wrong growing up. And one of those stories is that of the hare and the tortoise. And in this fable, during the race between the hare and the tortoise, the hare was really complacent and took a break thinking that, the tortoise is slow and it's never going to pick up steam. He's the one that's going to win. And later, he found out that the tortoise outmastered him and was the winner. So, Kanika, my question for you is this. This fable has a very powerful moral. We've heard it many a time. Slow and steady wins the race. But what do you think are some learnings that can be related to investment? And what is the financial wisdom we can take from that tale and apply into our lives?
So Ahalya, in the story, the tortoise slowly and steadily, that is consistently and persistently, moves towards their goal and keeps focused on the finish line. The very same way in long-term investing, investor has to be focused on their long-term goal and move consistently and persistently towards their long-term goal. On the other hand, you remember that the hare got very tempted to take a nap. He got distracted from the finish line because of that. The very same way in long-term investing, we should not, get distracted from our long-term goal and remain focused and not give in to temptations like short-term market movements and make impulsive decisions, basically. And, the other thing is the power of compounding, which is the second biggest learning we have from the hare and the tortoise story. In compounding, if you invest a certain amount of money, for instance, we have invested 1,000 rupees today, and in this year, we earn 100 rupees on it. Then next year, we will be earning profits, not only on our 1,000 rupees of initial investment amount, but also on the 100 rupees of profit we made this year. And that way, every given year, our profit and our investment value will keep increasing over time. And as there is exponential progress and growth in our profits, it is the very same way the tortoise made like this steady and exponential progress towards the finish line. It's very, very similar to that. And, this just reminds me, how slowly and steadily he kept taking small steps towards the finish line, the tortoise. The very same way, if we take like small, consistent steps towards investing small amounts, we can also have remarkable success in investing. This is something I learned from one of my all-time favorite books called Atomic Habits by James Clear. My most loved line from this book, Ahalya, is that walk slowly, but never backwards. It's just like the tortoise kept walking slowly, but he never stopped. He never looked backwards.
Absolutely. In fact, you've given me a lot of insight into what not to do as well. And I think it's important to articulate that, Kanika. So slow and steady wins the race. Discipline is really important. But I think a lot of times we do have the tendency to maybe slip up and behave like the hare, right? So I'm sure you've come across both hares and tortoises. But in your experience, what are some of those hare behaviors that we need to avoid? And how have you convinced people to correct their course of action? What if that Hare could face like a turning point and change the course of his life as well?
So, Ahalya, one thing I have noticed again and again, and what I call like a very Hare-like mindset is like giving into not being able to resist temptations, giving into impulsive decisions based on short-term market movements. I want to tell you like two examples of it. Okay. The first is when the markets correct drastically. What happened in 2020 when we were all hit by the COVID pandemic, or what is happening currently in China. The markets are really low. What happens in such times is that your clients and investors in general tend to get very fearful. And when they get very fearful, what they do is they stop investing or they pause their SIPs. But if you think about it, this is the time you should be increasing your investments, okay? Because everything is available at a discount. So pausing your investments at a time of a correction and getting scared is like saying that I'm scared to go shopping to Zara today because Zara is on sale. Does that even make sense?
Right.
So that is something I call like Hare-like behavior. And on the other hand, the same thing happens when the markets are rallying and they're at all-time high. So when the markets touched like 65,000 recently, I had at least 3 client calls and they all call me up and they are like, my friend, they invested into this fund and they made a lot of money. Their profits were very good. Even we want to make the similar profits. So you take all our money and you put it in that fund. I know they're getting FOMO because their friend made a lot of money. But what needs to be understood at this stage is by investing at such expensive valuations, you're not going to make the same profit as your friend. In all probability, already missed that rally. And the only way to make similar profits is to begin investing at a slow and steady pace so you do not miss the next rally. And one line I always use with my clients, I have learned this from Morgan Housel. You do not need to risk something you have and something you need for something you do not need. And most of the times, this line really works.
Absolutely. And thank you for quoting Morgan. I think a favorite for all of us interested in sort of elevating our investment journeys.
You're listening to Moneywise, successful investment ideas that create wealth. Did you know?
SIPs continue to grow in popularity among Indian investors. AMFI data shows that inflows into equity mutual funds more than doubled in June 2023 to 8,637 crore rupees. New SIP registrations were also the highest ever in June at over 27.78 lakhs.
Personal finance simplified only on Moneywise.
So it's become clear, Kanika, that so far, your advice is definitely to just walk forwards and just never look backwards, right? And that, kind of also, it intrigues me because how did you get here to, understanding all of these nuances about investing, and how have you dealt with the challenges that you faced throughout your investment journey?
So Hare, let me tell you, my introduction to the investment world was quite different from a lot of people who are a part of this industry. Let's just say I never planned for it. Okay. It's something that just happened to me. But sitting here today and chatting with you, all I can tell you is, here I am. This is me. There is nowhere else I'd rather be. I had the sweetest start to my investment journey. When I graduated from the Mumbai University, I topped finance. And for that, I was awarded 20,000 rupees by KPMG. And 15 years back, that was quite a sizable sum. Right. Any girl that age, I was like, oh, that makes for a good shopping spree, right?
Right.
But I had very well-intentioned friends, and a very wise friend of mine told me, Kanika, don't waste that money on shopping. Rather, you invest that money and you can shop with the profit every single year of your life. That sounds like an absolutely brilliant idea to me. So I researched a few stocks and I invested that 20,000 rupees. And that stock earned me a handsome profit in the next quarter. And once you have tasted profit, you are addicted to investing. There is no looking
Right.
back. That's exactly how I started off of my journey of investing. As far as challenges are concerned, let me tell you, Ahalya, the most challenges faced are when there are black swan events. Black swan events are like the COVID pandemic or like the global financial crisis, right? None of us know that these events are going to hit us. They don't give us any forewarning and come, but the impact in our lives is massive. So these challenging times taught me a lot. So let me just explain this better. So basically, when there was a global financial crisis or there was a COVID pandemic, the markets corrected by 30-40% within a week. Yeah.
Right.
Investors lost a lot of money. All their hopes were shattered. And seeing losses can hurt anyone. And all the best of blue chips were coming crashing down. At that point in time, investors were panicking. And this panic took over the markets. So when emotions take over the markets, then nothing is in your control. So this is the first lesson I learned in these challenging times, is that you have to be emotionally resilient in the face of market volatility, because you cannot control people's emotions. So don't let that frighten you. Just stay focused on your long-term investment goals. And as long as you have invested into a good business or a good stock or a good fund, then there is absolutely no reason to worry. And that is the important lesson I have learned during my investment journey. That is, that before making any investment decision, do your research and analysis extremely thoroughly. As long as you have invested right, there is no reason to worry. Eventually, markets start going up again, prices start going up again, and they will revert to intrinsic value and you won't lose your money. I just want to quote Warren Buffett out here. He says, buy something that if stock markets even shut for 10 years, you are not worried. So you have to buy so right, and you have to analyze your investment decisions so thoroughly.
Very nice. So if I've got it right, and grade me now, Kanika, I think your lessons are to stick with it, do your research well, and let go of the things that you cannot control, and you will kind of hit that sweet spot when it comes to your personal investing journey.
Absolutely correct, Ahalya.
Okay, fantastic. Well, I'm sure everyone listening to this podcast is going to be a good student as well and learn from your lessons, Kanika. Thank you so much for joining us on this episode of Moneywise, for giving us so many insights, from thinkers as well in the field of finance, and also for providing your own insights through your personal journey. It's been really great talking with you today.
Thank you for having me, Ahalya. I had a wonderful time chatting with you and sharing my insights. If I can add to any nascent investor's journey to financial success, it makes me extremely happy.
No, absolutely. I think we've definitely accomplished that a little bit, even if it's just one step at a time. And everyone, those fables, when you go back to them, the older you grow, I think they provide us with real important lessons in life. So let's all try to be the tortoise and not the hare in most financial situations, at least. That's a wrap on this episode of Moneywise. We will catch you with another conversation very soon. Thank you for tuning in, and thank you, Kanika, for being with us.
Thank you, Ahalya.
You're listening to Moneywise, brought to you by Bandhan Mutual Fund. Check out the rest of our series for more insights on investment and personal finance. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.